I'm Charlotte McLeod with the Investing News Network, and here today with me is Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Thank you so much for joining me today. Great to see you as always.
Yes, thanks for having me, Charlotte.
Of course. So it's the end of the year, and we are picking up on our last conversation, which was about 6 months ago. At the time, you told us that a big move in gold probably wasn't going to come as soon as some people hoped that it might. And definitely we've seen that 6 months down the line. So I want to start off by hopefully having you recap what we've seen for gold in 2022. Has it been about what you expected since that last time we talked, or were there any surprises for you?
Sure. Yeah. Let's take a look at the charts, and let's take a look at it from kind of a longer term standpoint. We'll take a look at let's take a look at the monthly chart of gold and get a feel for it. So we've definitely been struggling when we look at it over the past year. I mean, it's just really been coming down, and it broke down through this support level around 1675. And the market is trying to regain stability. I feel as though the gold market, to me, it's had an oversold bounce. When you look at this, it's a very, very strong bounce to the upside, but really the bias is still very negative here. And I feel like this is just a bounce, and we're going to start to go lower. I mean, I think we're going to continue to see maybe metals hold up a little bit as we go into the end of the year, the last couple of weeks. But overall, I'm still anticipating the stock market to put in a major top. I think we're going to see the dollar start to rise pretty much all year. It's been, stocks down, dollar up. And I think if stocks are going to fall again, then I think we're going to see the dollar continue to rally and become a defensive play. And if that happens, it's going to put pressure on metals. And I do think we're going to see gold break below, 1600 and start to go much lower in 2023. But I do think probably in the first half of 2023, gold and silver and miners are going to put in what I think is going to be a major bottom, a super cycle bottom that is going to lead to a multi-year rally. The last time we've had a setup like this in the market was back in 2000 in terms of a super cycle coming together. It topped out in 2011, 2012. And the next super cycle actually kind of took place in 2019. And this is the first pullback within the super cycle. And believe it or not, this pullback here is very similar in terms of the 2008 sell-off that we saw in gold. When the stock market entered a bear market, we saw gold fall 34%. I think we're still in a bear market for stocks. And when you look at this price, I think there's potential for gold to fall back down. I don't know if it'll go quite down this low to this breakout level around 1400 or so, but I think there's a lot of downsides still in gold going to get pulled down with a rising dollar. I think the dollar is going to spike and go ballistic. We're going to see panic selling, which naturally creates margin calls. Investors start liquidating everything, which we have seen this year. When the markets sell off, investors are selling everything, including gold, silver, and miners. So I think gold is still got a lot of pressure coming, but it could put in a major low. And then we're going to have something just like in 2009, where gold, silver, and metals miners go absolutely ballistic. So I think there's some more pain to come, but I can see light at the end of the tunnel. We just got to, weather the storm until that happens. So that's kind of my big picture view of gold. And, this is just a bounce. People, I think, are getting overly excited about the upside potential in gold from here. I think there could be some pain.
Okay, so that was really a roller coaster ride of information about what's coming for gold. So
Yeah.
let's try to unpack some of what you said there. I think that people definitely get nervous when you start talking about things like prices going way down, but it's sounding to me like that presents an opportunity. So can you talk a little bit more about that and how people may want to handle this coming price activity in gold?
Yeah. So, I mean, there's a lot of different types of ways to trade gold. Depends on your time frame, your horizon. If you step back and look at the, the 34,000 foot view, the high level view of gold and the major trends, as like an investor buying physical metals, I see this opportunity of a pullback being a great time to hopefully be able to add to our stacks if gold and silver pull down, because I think going forward, it's going to be trading a whole lot higher. Now, if you're a short-term trader, we actually exited our gold mining trade positions this morning at the opening bell. We locked in some nice gains. We're out of this bounce. The market is telling us that it wants to go lower here, not just the precious metals sector, but the overall stock market. And if the stock market's falling, it's like the tide going out. Pretty much all boats, all sectors and stocks go down with it. So we just exited the gold miner space because I think it's going lower. And as a short-term trader, I mean, either whether you're going to hold through it and it will be scary and painful, or you can sidestep it or potentially try and profit from falling prices with inverse, gold miner ETFs, things like that. So depending on your outlook, long-term investor, I want a big pullback. I would love to go and buy some more physical buyers, at 1,500, 1,400 an ounce for gold. As a short-term trader, I definitely don't want to be holding stocks if they're going to fall, because they're going to fall a lot. So it really comes down to the angle you want to go. I'm not saying it's going to go down, but you definitely should protect yourself, because all the signs are there that gold, silver, and miners are about to pull back with the stock market, and it could be pretty abrupt.
Okay, so we do have some options when it comes to how to approach this. I wondered if you could talk just a little bit more about the levels that we could see gold go down to. I know nothing is certain, but if you're looking for that big pullback, what are the points that we may end up getting to?
Sure. Well, we can look at it from a few different ways. I love to use Fibonacci. If we use a Fibonacci retracement, this will tell us some levels where gold should pull back. So how it works is there's an upward momentum move, and then usually an asset likes to pull back 0.38% or 38%, 50%, which is the purple line, or 618%. So based on the price action we've seen, we saw it come down to this 38% retracement. It kind of pierced through it, bounced back up, and then we came down over the last couple of months. We hit the 50% retracement. We're bouncing back up, and we're really coming right into a big resistance area for gold. Gold is definitely struggling to get through here. It needs a lot of power, a lot of buyers to muscle it any higher. It's starting to get rejected. And then I think we could come all the way down to potentially the 618, which would be a really good level, because not only is it kind of a falling trend line, but it's also a level where we had a bull flag that lasted 5 months back in 2019. And it's a level where price kind of came down and tagged a long lower wick and then took off. So it's going to naturally be a percentage pullback, which seems to happen in the stock market. It's a support level. There's a lot of things that'll come into play here. So that's a level that I'd definitely be looking at to potentially pick up some physical metals. And then from there, hopefully it would go a whole lot higher. Now, there's the other way we can measure the downside move, which we use Fibonacci extensions. So instead of a retracement, figuring out how much it's going to come back down, we can figure out the current downtrend, how much momentum does it have to keep going lower in this trend. So we actually use the recent high, we grab the recent low, and then we go up to this high level that it hit this month. And it's telling us that gold could fall all the way down to 1362, which is the level I kind of drew this 34% retracement or sell-off. That's the same sell-off percentage we saw in 2008 during the bear market. It's also a major level. If I draw a line across this chart, it's a major level where gold broke out in 2019. So those are the two key levels, somewhere around 1,500 and then potentially around, you could say 1,400 are going to be two very strong levels where the market, gold could find a bottom and then just be off to the races for many years of huge rallies. So it's exciting, but obviously those are some pretty big downside targets for the market to correct. Now, just to reiterate here, I'm not saying it's falling 34% from where we are right now. I'm saying it's falling about 14% to potentially 23% from where we are. So it's not huge, but it's definitely tough to stomach because most investors start to get antsy after about an 8% correction. So something that's twice that or 3 times that, obviously is usually pretty uncomfortable for people who are heavily weighted in one asset class that's under pressure.
Yeah, that is a little tricky to be looking at, but thank you for helping us take a look at what's coming ahead. So you mentioned that this is an entry point for buying physical metal. I think it will be interesting to see, what premiums are looking like if we get down to those levels. I also wanted to ask you about if you're somebody who's interested in buying the gold mining stocks, are these also the levels that you should be keeping an eye on when it comes to that?
Yeah, so I'm interested to see what the premiums will be when gold falls. Like, do we actually get to buy it at a discount, gold and silver, or do we still pay these ridiculous premiums? The physical price stays the same, but the spot price just collapses. That's going to be the big question. And for some reason, I'm concerned we're going to have these ridiculous premiums. I mean, they're already ridiculous, but I mean, they could be 2 or 3 times what they are. Who knows what the markets will do? So that is going to be a big question. In terms of gold miners, yeah, these 2 lows, when gold finds a bottom down here, this is like what I think every gold bug, including myself, has been waiting for. This is like the start of a 2001 kind of market low where gold miners could rally hundreds, thousands of percent for several years and just keep on going. So this is like the setup that, people have been waiting. The last time they caught a big setup like this in gold miners was early 2000s. And of course, it was such a huge run. Everybody's still wanting to do it again, but we've been waiting forever. And this to me is like the repeat, your second opportunity to catch the precious metals, mining stocks, the juniors, the micro caps for like these crazy, unbelievable runs. But again, they're going to be under pressure until we get to these points. And then I think it's, I wouldn't say load the boat, but definitely get active in these because you only need a couple of them to have some huge returns and big account growth.
Okay, I think that gives us a pretty clear idea of what could be coming. So when you mentioned pressure on the precious metals, when we spoke during that mid-year conversation that we last have, we talked about what's going on in the general stock market as well. And you told us we could see a bear market in stocks potentially for another 8 to 16 months. So let's check in on that and see where we are.
Sure. So where we are right now, I mean, this is the monthly chart of the SP 500. And long story short, where we are kind of right in this area, to me, the way the markets are set up, how all of sectors have moved, where we are in terms of cycles is very similar to this area here in 2008, just before we had the big collapse in price, which is what pulled gold, silver, and miners down as well. This was blood in the streets, panic selling, everyone literally dumping everything and forced to because of margin calls. I think we're in this phase where the market's just kind of clinging on to hope here. And then it's going to have a big leg down. And who knows, I've got projections of about a 20% decline from where we are all the way down to about a 47% decline in the SP 500. So we're talking some big potential downside, which will cause enough fear that it'll pull pretty much all assets down. The economy will get very weak. I mean, a really good way to visualize this is this infographic that we made. And more or less, we're kind of in this topping phase, this stage 3 topping phase. And the question is, we're somewhere, in this phase, or we're just clinging on right here, and we're about to have that stage 4 decline. The stock market moves in 4 stages. Stage 1 is a sideways base. Stage 2 is a bull market. Stage 3 is a topping distribution phase, which is what we've seen all year. We actually saw stage 3 starting to take place in early 2021. And we're kind of right in this point here where we're very close to a big collapse. It's going to, I think, catch a lot of people off guard. In terms of where we are in the overall cycle of the stock market, I would say, when you look at this little table, we're somewhere right about here and really just about to see a big reevaluation event, a cleansing of the financial markets, all the leverage getting wiped out. And then we're going to start a new major cycle up, which is down over here, just before the stock market puts in a bottom, is when gold, silver, and miners come to life. They usually bottom 2 or 3 months before the next bull market starts. So it gives us a good early warning sign about the stock market, but it also gives us a sooner opportunity to get into precious metals as that ultimate defensive play. Once all the leverage has been wiped out, people start to move into physical assets that they believe in, and that this economy, I mean, it's a perfect storm for precious metals. It's just we're not quite in the perfect cycle phase for it to take off just yet. So that's kind of where we are in the grand scheme of things. I think a lot of people were in a complacency stage where we haven't fully started to break down yet, and people aren't panicking. People think the bear market is almost over, and this is where the big damage is done, and where there's big opportunity on the downside, because we're going to be able to accumulate assets at a much cheaper value down the road, as long as you're not holding and getting hit with this. So that's kind of the stage that I think we're at with the stock market before it potentially rolls over and starts a big move down, resets the markets, and then we should be off to the races for many years of higher prices.
Yeah, no, I think you're right. You can really feel that complacency in the market right now, I think. So one thing that I wonder is where you see the US dollar in all of this, because we're coming off a year where we've been hearing about how strong it is, how that's also tamping down prices for precious metals. So what is your outlook for the dollar in 2023?
Yeah, a lot of people are bullish on stocks. They're bearish on the dollar. So many people have said the dollar, has topped, and I'm on the very opposite equation. If you go back in time and take a look at the 2000, when we had the last major super cycle kind of reset, you can see the dollar here. It rallied all the way up to about 121, and during that path, we had some very sharp pullbacks, big rallies, had multiple surges. Well, we've only really just had the first, sharp pullback in the dollar index. I think we're going to continue to see the dollar index rally up and put in a major topping phase up here. And as it rallies and rips higher, that means the stock market, I think, is collapsing. It also means precious metals will be being sold into. Rising dollar hurts the metals. All these things come into favor. And then eventually we will see the dollar top out and break down. And then we go into one of these super cycle lows where gold just falls the dollar falls for years. Gold, metals, miners rally for years. I think we're going to see physical assets come back and become the shining star, which we haven't seen in 20 years. So it's going to be pretty exciting. But I mean, we're still looking at the higher dollar prices for 6, 8, 12 months. And that means we're going to be stocks and metals will be under some pressure.
All right. So again, we do require some patience. And this is something that I remember that you told us last time. You said these big patterns, they take time to play out, right? So that's kind of what I'm understanding from you once again.
Yeah, and that's the problem. These are the thing is, we're in a major shift in a long-term cycle. And the problem is it's choppy, it's all over the place, and we all want things to move in our favor and start moving right away. The problem is these patterns are so big, there's so much at play. It takes months and months and months to unfold. And we're getting closer. Every bar we're a month closer, but I mean, we're still probably second half of 2023 before I think things start to get really exciting for the dollar topping, for precious metals and miners coming to life. They'll be one of the first sectors, I think. And I think it'll be life-changing. I think the precious metal sector will be one of those life-changing events that if you're on the ball and you understand the opportunity, I think there's huge money to be made in a very short period of time in the precious metals sector. But it's just not here yet. We just have to let it unfold month after month, and don't get sucked into these intra-month rallies. We've had a nice bounce with gold, but really it's just a 1 month bounce right into resistance, and now it's getting rejected. So if you zoom in on the daily chart, which I've tried to stay away from on our call, if you stay away from it, you can see the big picture view and get a feeling of what's happening. If we zoom into the daily chart, people start being like, "Oh, I want to buy here and sell here. It looks like it's going to go higher," but it's just noise in this bigger picture that you really do need to focus on for precious metals. That's how I look at it anyway.
Right. Okay. So I'm curious as well where inflation fits into the picture for you. I know that you're very focused on the chart and you're less focused on what is the Fed doing, et cetera. We do have a meeting coming up this week, but I do wonder where you see inflation going in 2023. What does that look like for you?
Yeah, I think inflation is going to probably start to diminish. I think we need the recession. I mean, I feel like we're in a recession and we're still waiting for the economic data to catch up. It's so far delayed. Things are coming to a grinding halt. Stuff isn't selling as fast. Home prices are coming down. All kinds of things are slowly topping. So I think inflation I'm hoping has topped. If anything, it could stay up here for a little for another quarter or two. I think it's a slow moving kind of number, but overall, I do think we're going to see inflation start to come down by the end of next year. I think we'll all be, seeing it trending down. We'll be like, okay, finally, it's coming down. But that it also means we're going to be in tough economic conditions, because I think we're going to see people come to a grinding halt on spending, and that means all this. Right now we got a supply issue. You still can't get stuff. You wait 6-8 months, a year and a half for a vehicle. So once we get into a recession and people say, well, I'm going to cancel that order for that car. Not buying this. I'm not going on this trip. I'm not upgrading any of this stuff. People are going to tighten up. And then suddenly there won't be the gouging of the prices, the huge inflation. People will actually have inventory that they want to move. Stores will want to get rid of this. So it's a big, slow moving trend, but I think 2023 we'll see it top out. And again, I think 2023 is going to be a reset year. A cleansing of the financial, of the inflation. Everything is just going to kind of get reset, and trends are going to reverse.
Okay, so if we look ahead to this big reset year, which is hopefully what 2023 will end up being. So we've talked about the opportunity in gold. Are you watching any other areas, either in the metals or outside the metals sector, that you think people should pay attention to next year?
I think the bond market's going to come back into favor because what's going to happen, in my opinion, we're going to see stock markets start to break down. There's going to be panic selling. There's going to be huge losses going on. The Fed's been great. They've been just loading their gun with, interest rates. Every quarter basis points is like a bullet in their gun. They've got tons of them now. So I think they'll eventually stop raising rates. They'll start cutting rates. And every time they cut it, I think that's going to help send the bond market higher, and bonds could go full swing from, full on bear market to a huge, massive rally. So I think there will be a safe haven in the bond market, which a lot of people I think have now given up on. It's just typical mass psychology. They all finally bailed out of bonds. We saw this over a couple of months ago. I actually talked about on October 21st, I said, expect your retirement accounts to rally. Bonds should start to rally in the stock market. Both of them have rallied ever since. We're going into the end of the year for the end of year bounce, this complacency kind of rally. And as I said that, I looked through a whole bunch of advisor websites and they all said the same thing. Expect more trading in your accounts. We're going to be rotating out of assets that aren't performing, and they're all getting out of bonds. And I think the average investor got burnt so bad on bonds this year that they're not going to touch them next year. And of course, I think it could be one of the best assets that actually takes off, simply because we got lots of rate cuts potentially ahead of us, and everything else will be falling. And if rates are going down, people are going to pile into bonds. So it's going to be a big shift, I think. And people who don't get on the bond wagon are going to miss out in a pretty big way, going, why did I get out of bonds at the bottom? Like, how did that happen? Right. So it's just the way, psychology of the market works. The market has a great way of getting you out of a trade just before it, goes really big in a certain direction. And that's why I stick to technical analysis. I could care less about fundamentals or economic data. It's all noise. It just makes the chart wiggle. Overall, it doesn't affect generally the overall trend. You just follow the price charts and look at the short-term and the long-term views. If they're in sync, then you want to be trading with that trend.
Okay, so it's always good to, I think, look at areas of opportunity. But as we look forward to next year, are there any areas of the market that you are seeing that you would want to stay away from, that you would say you should exercise caution when it comes to this?
If I was to probably stay away from something, I would probably want to stay away from the stock market in general. I think the stock market's going down. A lot of people want to profit from falling prices, which you can with inverse ETFs. The only thing I would caution people on is the stock market falls a lot different than it rallies. It is a lot harder to play downward moves, even though the moves look big and strong and they have big percentage moves. It's actually very hard to profit from a falling market, just the way that they move and they break down. So people just need to be aware of the inverse ETFs can hurt you pretty bad because some of the sharpest rallies in the stock market pretty much almost always happen in a bear market, and you'll be on the wrong side of that trade, and an inverse ETF will get hit very hard. Overall, I mean, I think the key here, depending on your style, if you're a short-term trader, then I think you want to be active and you want to take advantage of anything that's rising, which will most likely be the US dollar or inverse ETFs on the stock market. If you're a long-term investor, then you either want to potentially look at the dollar, which is a very conservative, slow-moving asset, but it can move up while the rest of the world kind of falls apart. Or you might want to be in cash and just kind of sidestep this market, let it cleanse itself, and then be ready to move back in when the bull market is starting again, hopefully late next year.
Okay. Yeah, no, usually at this time of year, I like to ask, your best advice for investors heading into the new year. I think it sounds like definitely you would advise people to take an individual approach, know yourself and what you are trying to do, and act accordingly. So any final thoughts that you would add for 2023?
I think 2023 is just the year of, I think you need to actively manage your investments. You can't really just do the buy and hope strategy. I mean, if you just buy and hope, you're going to go through the roller coaster ride that is not fun. Most people have gone through it this year. You realize that if you don't manage or have some risk protection in place, then you're going to get caught on the wrong side. And that's the problem, is so many people, unfortunately, we're in this perfect storm where there's a very large group of investors, baby boomers and up. The typical strategy is to put your age in bonds. And, that generation has got most of the wealth, and they're heavily weighted in bonds. And bonds were like the worst performing asset. They were a terrible asset this year. They got hit really hard. And if you don't protect that, things could get really bad going forward. And this is not the time you want to lose your money. So it is way better. I always tell this to subscribers. I said, it's way better to miss out on a move than it is to, have to delay your retirement by 3 to 5 or 7 years because you didn't get out of something. A big move down in the stock market could not only delay your retirement, but it could destroy it. And you'd have to downgrade your lifestyle. I know lots of people that have seen their portfolios fall so much this year that they've totally changed their retirement plans. They're not doing this anymore. They're not buying that. Everything has changed. And it's really depressing that they worked so hard and in 1 year, everything got wiped out. And it could have been completely avoided by following the markets using technical analysis. And when something pulls back beyond a certain level, you move to cash, let the market fall around you. So it really is the buy and hold. If you're more or less 50 years of age or older, the buy and hold strategy to me is one of the riskiest ways you can invest, because you don't have time for a 7 to 12 year potential correction. If we go into a really nasty correction, it could be like the 2001 market top, and it takes 12 years for the stock market to come back again. And you don't want that. So you really got to manage your risk. It's better to miss out on gains, keep your wealth in your lifestyle, than it is to worry about missing out on some gains, but actually take a huge loss. And people just feel like they need to be in the markets all the time. And you generally do, but not in a bear market, not when things are going backwards. It's best to step aside and go do other things with your life than watch your money just vanish before your own eyes.
Yeah, that's really illuminating when you put it into the actual years that your retirement can be delayed. So that's really helpful. So as we're wrapping up, if you could just let people know where they can find you if they want to learn more?
Sure. Yeah, they can read my blog posts or get my trade alerts at thetechnicaltraders.com. And every morning I do a video. I walk through the charts, kind of like what you and I did, but on a much more granular level. And we actively trade sectors and indexes and currencies, however the market sees fit. And I put on every trade, and subscribers follow what I do. So it's educational, and that's where you can follow me there.
Perfect. Well, Chris, thank you so much for coming on to talk about gold and what's going on in the markets and 2023. It sounds like it's going to be an exciting year.
It will be. Thanks, Charlotte. Always a pleasure.
Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Chris Vermeulen with thetechnicaltraders.com.